Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 29th, 2025, and we're diving into the third quarter earnings report of WP Carey, a leading net lease real estate investment trust. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. WP Carey has been a significant player in the real estate sector, and their latest earnings report provides some interesting insights into their performance and strategic direction.
Revenue and profitability overview. Let's start with the revenue and profitability. WP Carey reported revenues of $431.3 million for Q3 2025, an 8.5% increase from the previous year. Net income also saw a significant rise. John, what are the key drivers behind this growth?
The revenue growth is primarily driven by increased lease revenues due to net investment activity and rent escalations. Net income rose by 26.2% year over year, reaching $141 million, thanks to higher gains on real estate sales and lower mark-to-market losses. The AFFO per share also increased to $1.25, reflecting the accretive impact of their investment activities.
Investment and disposition activity. WP Carey has been active in both investments and dispositions. Can you elaborate on their strategy and how it's impacting their financials?
Absolutely. The company completed $1.6 billion in investments year to date, with $656.4 million in Q3 alone. They've also disposed of properties worth $1.0 billion, including significant sales in the self-storage segment. This strategic recycling of capital is enhancing their portfolio quality and supporting their AFFO growth. Additionally, they reported a 2.4% same-store rent growth, which is quite robust.
Balance sheet and capitalization. Turning to their balance sheet, WP Carey has maintained strong liquidity. What are the highlights here, John?
WP Carey reported total liquidity of $2.1 billion, which includes a significant capacity under their credit facility. They issued $400 million in senior unsecured notes and sold $230 million of equity under their ATM program. These actions provide them with the financial flexibility to fund future investments and manage their capital structure effectively.
Guidance and future outlook. Looking ahead, WP Carey has raised its AFFO guidance for the full year. What does this indicate about their future prospects?
The company has narrowed its AFFO guidance to $4.93 to $4.99 per share, reflecting higher expected investment volumes and lower anticipated rent losses. They also increased their dividend by 4.0% year over year, which underscores their confidence in sustained cash flow generation. CEO Jason Fox highlighted their strong investment pipeline and sector-leading rent growth as key drivers for continued AFFO growth into 2026.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $1.19 for this quarter. How did WP Carey perform against these expectations?
WP Carey exceeded expectations with an adjusted EPS of $1.25, beating the forecast by 6 cents. This outperformance is attributed to their strategic investments and effective cost management, which have bolstered their earnings capacity.
Key takeaways. In summary, WP Carey has delivered a strong performance in Q3 2025, with notable growth in revenue and net income and an upward revision in their AFFO guidance. John, any final thoughts on their investment prospects?
WP Carey is well positioned with a strong balance sheet and a strategic focus on high-quality investments. Their ability to consistently grow AFFO and dividends makes them an attractive option for income-focused investors.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on WP Carey's performance in the comments below.